In a world where investment strategies ebb and flow, one fact remains striking. Even at a decade low, foreign portfolio investors, FPIs, continue to wield remarkable power over stock prices in India. This particularly piques interest as markets evolve and new dynamics emerge. It's not just a statistic. It's a crucial insight into investment behavior and market mechanics. But here's where it gets intriguing. Data from Prime Infobase reveals that during the quarter of June 2025, companies that enjoyed an uptick in FPI investments posted an impressive average return of 21.73%. This figure stands in stark contrast to those stocks where FPIs lessened their stakes, which managed to achieve a considerably lower average gain of just 16.9%. To complicate matters, mutual funds MFs displayed a different pattern. Stocks they increased exposure to yielded average returns of 16.3%, while their reduced exposure stocks saw a slight rise of 17.2%. Meanwhile, companies backed by Life Insurance Corporation (LIC) that saw increased holdings grew by an underwhelming 9.4%, contrasting with 88 firms that had their stakes trimmed by LIC, enjoying an average increase of 17.2%. Market analysts caution, however, that although the thumbprint of FPIs might be diminishing in the face of rising domestic liquidity, they undeniably remain critical market shifters and price influencers. In stark opposition, domestic institutional investors, DIIs, are frequently categorized as price takers, primarily contributing stability within this complex ecosystem. But let's zoom in on some numbers. As of June 2025, FPIs accounted for only 17.04% of India's total market capitalization, which marks a notable dip from 17.22% recorded at the end of March 2025. Surprisingly, even with net FPI inflows hitting a notable 38,674 crore rupees during the quarter, their overall market influence seems to be on a slow downward trajectory. Identifiable stocks, such as Vishal Mega Mart, famous for its substantial FPI contribution of 582 basis points, skyrocketed 28.5% in share price. South Indian Bank experienced a similar surge, gaining 33.5% after an increase of 562 basis points in FPI holdings. Paradeep Phosphates led the pack with a staggering 70% increase following an FPI rise of 680 basis points. In sharp contrast, stocks like High-Tech Pipes and Balaxi Pharma, which faced significant declines in FPI involvement, found themselves struggling. High-Tech Pipes dropped 1% with a cut of 726 basis points, while Balaxi Pharma plummeted 22% following a 716 basis point reduction. This noticeable disparity in performance raises intriguing questions about market behaviors. Is the force of FPIs diminishing or simply evolving? With their ability to move markets, can domestic investors learn to emulate some of their strategies to mitigate risks? What do you think? Do share your thoughts. Are FPIs still the market movers they are perceived to be, or is it time to rethink their role as influential players? Your insights and opinions could spark an interesting discussion.